bigger picture, what we then look for is the smaller picture inside this. If we get a chance to trade, then we trade. So you see when I put the smaller picture on top, you'll see that we get a nice easy money sell here. This buy here disappears because it's not good enough. So we have to wait for this buy here, which is a red candle there. So there's the buy trade there. These sells are not sells because they're not from the big picture narrative. This sell is from the big picture narrative, and therefore from that, that's the sell trade there. We get a nice sell away from this. This buy is not from the big picture. This buy is a micro signal, and therefore a possible area to take some money if you like, some profit taking. But you can see that when the micro world switches off, then we can see the big world. The big world has a sell trade here. Now that's not a sell until the micro world agrees, right? So that's a sell trade on the big world, and then the micro world agrees when the red line stops trading. When the red line stops trading, we sell it, and we sell it. Now we're only really willing to work these for 3 or 4 or 5 candles. We're not willing to work past 3 or 4 or 5 candles after the original entry. After that time, it's a new story. It's a new storyline. So you can see that we're currently short off of 22s. We've got down to 15s, and it's starting to work its way nicely in our favor on the short side. So because of that, the micro world gets switched off, and we're now looking for a macro buy trade again. So we're waiting for the micro world to show up again, and then if we get a micro world, we move into a bid watch, and we start looking for that, or an offer watch, but we're looking at the moment probably more likely to be looking for a bid watch, and then we execute. Does that make sense? So there's the macro world here, and then the micro world gets overlaid on top to make sure that the micro world and the macro world both agree in terms of their accumulation narratives. If they agree, we take the trade. Yeah? So we can see that from the cash open, there hasn't been any other trades. That's it. That's all we've had today from the max S&P trades at the moment, is a sell here, a buy here, a sell here, and a couple of sells here. And that's what we've had so far from the max signals. But having said that, 1475 into 11s, it's 3 points. It's $150. And then a buy trade from 10s up to a high price of 23s. That's a 13-point move. That's $650. A sell trade from 23s down to 13s. That's a $500. That's $1,100, $1,200 so far. And then the current sell trade from 22s down to 14s. That's another 8 points, another $400. That's taken us up to about $1,600 per contract so far for max. $1,600 per contract so far for max, which is acceptable. You know, it's acceptable at this stage. And as I said, it's just checking that the small and the short term and the macro are in line with each other, making sure that the trades line up, making sure that the narrative is in place, and obviously that idea allows us to pinpoint the perfect turning points where it's basically just manipulation. It's no longer a part of the accumulation strategy. It's just that last squeeze, that last attempt to get any juice out the market that we're trying to see. And obviously based on that, we're trying to get a bit of money coming out of that trade, and that's exactly what we're getting. A little bit of cash coming out of that trade. So sell side business on max right here, making some monies. And hopefully that makes sense, guys, because that's what we're kind of thinking about as a trade narrative. 101.80, guys. My buy trade from earlier has now made $4,000 per contract on oil.